The biggest value that I bring to the table is that I'm walking in their shoes. Like, I understand the day-to-day struggles that we go through, right? A lot of people think of the IRS as the bad guy. The IRS is actually your partner, and you need to treat it as such.
Mindset, baby.
The biggest mistake is gonna be the lack of planning and not understanding their numbers. And I'm not doing the estimated payments. Before the end of the year, I'm investing that money
Wow.
in an alternative investment that has a tax mitigation tool attached to it. So now I'm investing in my future.
And this is where tax strategy meets real estate, really. Welcome back to the NAHREP South Florida podcast. I'm Cindy Perez, your host, real estate agent with the Compass Florida, and I've been on my team at Compass Florida and president of NAHREP South Florida. NAHREP is the National Association of Hispanic Real Estate Professionals, and we are Latino inclusive and not exclusive. This podcast is about bringing experts into the room so that we can learn, we can grow, and we can go deeper than we can at our live events. We have 4 events a year here in Miami, and we can't wait to see you at the next one, which is October 23rd, where we're going to have our speakers be there. And today, I'm joined by someone whose story I think is going to inspire you as much as her strategies will educate you. Charina Padilla is the Client Development Director at Engineered Tax Services, and she's helped unlock billions of dollars in hidden capital for business owners, investors, and advisors. But what's even more powerful is her journey. She's gone from architectural design to corporate America to becoming a cancer survivor, business owner, mom. Let's talk about that. Mom, and now a national leader in tax strategy. Charina, welcome to the podcast.
Yeah, thank you for having me. I love being part of the NAHREP Familia and proud national member. So always love trying to bring some golden nuggets that everyone can take advantage of and continue growing.
Yeah, we've seen you at some of the national events, and we had to just steal you to come here to Miami to really pick your brain. So, hola familia, my name is Cindy Summer Perez, and I am the 2025 president for the NAHREP South Florida chapter. NAHREP is the National Association of Hispanic Real Estate Professionals, and our mission is to advance sustainable Hispanic homeownership. With over 100 chapters nationwide and more than 58,000 members, we're proud to be part of a powerful network making a difference. Our local South Florida chapter, also known as the Miami Chapter 305, is ranked top 10 in the nation and number 1 in the Southeast region. Standard membership is just $49 a year when you select the South Florida chapter as your home chapter, and that gives you discounted pricing on our 4 local events, plus regional and national events. Or you can go for the Platinum membership at $250 and enjoy universal membership across all chapters in the region. Register now at nahrepsouthflorida.org/membership. And now, let's get back to the podcast. I'm excited about that. Your bio doesn't read like a straight line. You started in design and construction. Then you moved to corporate America, Home Depot, right? And then you started with tax strategy. So just tell us a little bit about that. Take us back. How did your journey lead you here?
Sure. Thank you so much. It's definitely not linear at all. I started my career in the architectural drafting and design world and worked there for about 4.5 years. At 18 years old, I founded my first company, which was a permit running services company. And that led me to connecting with Home Depot. I took a project coordinator job, but the biggest thing there was the opportunity to be an independent contractor for their permit running services.
The perfect running services?
Permits.
Permits.
Yeah.
Okay, got it.
So building permits. So in the home renovations division for Home Depot, they needed someone to do these processes for them as an independent contractor. So that's where I learned the power of combining W-2 income with 1099. So that's one of the things that we'll uncover as we go through this process. But then in 2010, I met Julio Gonzalez, the CEO and founder of Engineered Tax Services, and his small business was rapidly growing, and I kind of like craved going back to that small business mentality, right? And not all the cutthroat red tape that we deal with in corporate America. And he had a great team of engineers, but was looking for someone that had the technical expertise and the project management skills to keep projects under, within the budget and be able to offer their clients the service that they were paying for premium services. So the rest is history. I kind of like started working on the energy efficiency division, worked my way up through operations and leadership, and I am now the director of tax strategy for the firm.
That's amazing.
Yeah.
I'm curious, did you study any of this? Because it's so technical. I just wonder how you came into it.
Yeah. So in high school, I took a course for drafting and design. On paper, I'm a business administration major with a minor in economics, so completely unrelated. But I've always loved business strategy as a whole, right? I come from a family of entrepreneurs. My father was also a CPA and a real estate investor.
Okay, that makes sense.
So it all comes together full circle. And that's why I'm here, because a lot of these things I grew up hearing about, didn't understand what they meant. And in 1997, my mom and my little brother and I migrated into the United States. From Venezuela.
Okay.
And at that point, we pretty much had to play the survival mode role for many years. I was 11 years old, I had to learn a new language and kind of like figure out that I needed to start working sooner rather than later to help my single mother, survive in this country. So we all go through it as immigrants, and I'm just grateful for all the opportunities, the mentors, and everyone that has supported me in this journey.
A story of resilience.
Yeah.
I love that. I can 100% identify. A lot of people can, also part of our NAHREP familia. I love that you are fully bilingual. So if there's anyone that may need your services or want to talk to you, you can support in Spanish, which we have worked together with a client that I had from Mexico. I also moved to the United States when I was 15. So I also understand that. I mean, I came from Puerto Rico, so I knew some English, but when I came here, I couldn't understand where people were talking to me because it was not like textbook English.
Right.
And I struggled with that. So you really have a story of redemption, not only what you've done, but you've also battled cancer. And you've turned that experience into purpose. You're so inspirational. I just thank you for keep fighting and being a role model for people like you that may be really just battling all these different things, and you're come out to the other side. You've kept a great attitude, great humor, just a spirit of a fighter.
Yeah. No, I definitely see wealth as being healthy, right? And as long as we're able to set that foundation, that's going to help us put all of our goals into paper and then materialize them. You could be a great mother, you could be a great wife, you could be a great sister or daughter, and at the same time be a professional. Like, we need to normalize this. And yes, we always want to do it all. And yes, you can do it all, but not at the same time.
Listen, we got to go to coffee because I want to have kids. And I'm like, I can work this much and also have kids. I don't know how you do it. I mean, shout out to you for being a mom and, doing business at the same time.
Yeah, it's definitely about proactive planning. The health situation really took a toll on my career, and I had to take a break, obviously. But I had the support, and I had some items in place that were able to help me get through that situation for 5 months. I lost my voice for 3 months of that. I had to go through physical therapy. It was a lot of things that happened. But luckily, I had a great support system, and being able to have also a mentor and my boss, right, that was able to hold my job until I was all better and able to reintegrate myself back into my professional career, that really made a difference.
That's why it's important to have systems, which we'll talk about, right? That can, when you're not working, your investments are working for you, number one. And then number two, it's not just about money, it's also about people. Like you just said, you had mentored and you had support. Sometimes we're working so hard all the time that we forget about our people, to actually invest into the people that are around us. So this is why I'm investing into you, so we can do life together.
Yeah, it's all about knowing your why and being
Mhm.
focused on that North Star. Like my husband and I, we knew from day one, we're high school sweethearts. We've been together
That's
for
amazing.
23 years now.
Wow.
And we knew from day one that the day that we decided to have kids, I was not going to work. That was kind of like our goal. And
That did not happen.
it did.
Okay.
It did. So besides everything that I went through on the health side, we were able to overcome those because we had plans in place, right?
Okay.
And in 2015, I got pregnant with my daughter, who's 9 years old now, and I was able to stay home for 3 years.
Wow.
Yeah. So, and then again, went back to work and
But it was your choice.
It was
to
my
go back
choice,
okay.
right? And, we've been able to run our personal business and be able to, make sure that everything's covered and that we're still staying true to our values and what we care about.
That's amazing.
Yeah.
So you just talked about it. You've run business yourself, also along your husband, and you're in facilities maintenance, construction, and you even do fix and flips.
Yeah.
How does being an entrepreneur yourself change the way you work with other businesses, owners, and investors?
The biggest value that I bring to the table is that I'm walking in their shoes. Like I understand the day-to-day struggles that we go through, right? Because we can say we're a business owner, but if we don't have our personal life in order, there's only so much that we can give to our business, right? So with my perspectives, I always like to say, like, let's color outside the lines a little bit and see how this could come together that could work for you. There's so many ways that you can apply strategies. I want to use an analogy, like let's say, for example, you want to get to Tallahassee. How many ways are there to get from Miami to Tallahassee, right?
Car, plane.
Right.
Yeah, bus.
Do you need to get there within the next 2 hours? Okay, let's get a private jet and we'll get you there. But if your goal is to maybe go on a road trip with your family because you have children, maybe you can stop by the beach in Boca and then go to the Flagler Museum in Palm Beach. And then maybe you want to stop at the Space Coast Center, right, and the Treasure Coast.
Okay, you've done this clearly.
Right. Stop at Disney or Islands of Adventures with your kids, and then you could still get to Tallahassee.
Yes.
So my value is getting to know you as a person, what's important to you, and then we'll figure out how to put that together, kind of like a blueprint, right? You're not going to design your dream home without the blueprints. You want to make sure that you are putting all the plans in place and that you have a clear roadmap on how to get there efficiently. And tax strategies is what really opened my eyes for that. Right? There's so much that we can do as far as planning, but if we're not able to implement these strategies, it's just dreams, right?
Yes. So first planning and strategy, then executing is one of the things that we also talked with Dr. Patty Mason, CPA, and we're going to have you and her talking in the October 23rd event together and combining forces so that we can teach the audience and help them get from point A to point B. But both of you are saying the same thing. First, you got to have a plan and a strategy, then you execute. And sometimes we don't even know where to get started or do it ourselves because we've never done it. So let's clear this up a little bit, because when people talk here, tax strategist, let's talk about your title, right? Or tax engineer. First time I heard that, I was like, wait, what is this? Like, what type of engineering this is? So for someone listening who doesn't know what a tax engineer is, how do you explain it in layman terms?
The simplest way to explain it is, let's look at the financial picture, right? You're a financial architect, right? You want to be able to lay out those plans to be able to get or find that money that's hidden in the walls. So in very simple terms, it's just a matter of understanding where you are now and where you want to be, and then we come in and bridge that gap with different strategies, support, resources that are available from our family office.
Okay, and we'll talk about where you can do this type of find the money on the wall, right? Which type of investments. And before we get there, you've led more than 20,000 projects nationwide, cost segregation, R&D credits, energy incentives, like 1790 and 45L. I have no idea what those mean. And most realtors and investors probably don't even know what those are. So explain what that is and give us one example of tax strategy that completely changes the game for an investor.
Well, the tax strategies, those are, or those services are kind of like our core services that we offer at Engineer Tax Services.
Okay.
We want to make sure that if you are a developer, a real estate investor, or even a realtor, you are looking at the whole picture, not just, hey, I'm going to find this property, invest in it, and that's the end of it. You want to be able to look at it as a business. In the same way that you're running numbers to find out how much your insurance is going to be, what are your property taxes, how much are you going to spend in repairs and maintenance, you want to understand that there's also money on the table as far as tax incentives. A lot of people think of the IRS as the bad guy. The IRS is actually your partner, and you need to treat it as such.
Mindset, baby.
Yeah, for sure. So you have a partner that you have to share 40 or 50% of your income with.
Yep.
What are you going to do? You want to maximize the benefits and look at all areas and make sure that you understand what is allowed, right? Because it's very important to stay compliant. You don't want to open up a can of worms. So it may sound overwhelming, and all of these numbers, 1790, 45L, cost segregation, all of that, it's daunting, right? But that's why there are professionals in the industry that are specifically working on your behalf and that are looking out for your best benefit. So don't be afraid to ask questions. And the beauty of it is that these services don't cost anything upfront. We work on a success basis type of fee. Okay. So it doesn't cost you anything to request a free benefit analysis to see how much money you're leaving on the table.
So if you're not doing it, it's because you don't want to, or you don't know.
Right. And you don't know what you don't know. But that's the whole idea of, bringing these space together to create awareness and make sure that people know that there are options out there.
Okay. Let me break it down real quick. So I'm a buyer, and I already have my first home, and I'm looking to invest in my first investment property, right? I'm looking in Miami, I'm looking with Cindy, and whether I want to go get a condo or I want to get a home. This is the time to then sit with Charina and say, hey, Charina, I found this house with Cindy. What do you think about this? Is this a good investment?
Right. Yeah. And we can break down the numbers for you very easily and quickly. Like within 5 minutes, I can run a benefit analysis. And just to use your example, let's say you're ready to invest $1 million in your first investment property, right? Just to use round numbers. If you are buying that property as an investment, it is considered a business. So in that case, you are allowed to use the power of cost segregation. And you could potentially deduct up to $350,000 on that $1 million investment. So why wouldn't you do that, right? You are immediately getting that return on investment on the down payment that you put in. And if you qualify for real estate professional status, you could potentially also write off active income that you're receiving from other sources.
Why do you think people are not doing this?
They're just not aware. And they obviously have that trust issue, right? And mindset that they think like, oh, it's too good to be true. No, this has been around since like the 1940s. It became popular in 2017 with the Tax Cuts and Jobs Act. And we saw that boom with Airbnbs. And everyone started investing in short-term rentals because they saw the power of getting those accelerated depreciation benefits upfront that boost their cash flow and gave them that immediate return on investment. So now it's being more common, but there's a lot of misconceptions and there's information that is not completely accurate because there's a lot of nuances out there when it comes to the implementation part. That's why it's so important to have that A team, right? And make sure that you're working with experts. Make sure you have a great CPA that's forward-looking. You don't want one that's looking at historical data and just recording what happened in the past. You want to make sure that you are getting the right advisors and legal teams in place for asset protection. Because at the end of the day, it's all about how you're set up and I love working and bringing everyone together because I see that that's one of like the challenges. Everyone's working in silos and they don't know what the other advisor may be doing. So I bring everyone together and make sure that everyone is working on my clients' benefits.
Yeah, I love that. I always say that I'm not just a real estate agent, I'm your real estate concierge because I have all the A team with me. I've got the Charinas and I've got the Dr. Patty Masons and I've got everyone that a buyer needs to connect with. But not only that, I have these conversations so that I can understand at a basic level, so then I can offer this to the buyers that are coming to Miami for investment or to South Florida. And so one of the misconceptions that you mentioned is buyers thinking, well, I'm already putting all this money into this house, into this investment. I don't want to put more money into figuring out what cost segregation is. But the truth is that first you could do it for free, right? The conversation, and then paying for the service is very little compared to how much you can save. You said up to $350,000.
Right. It's about 35% that you can put back in your pocket with just a few years.
That's incredible. So can you tell us a little bit about cost segregation turning like a 39-year depreciation into a 5, 7, 15-year, just very basic level?
Yeah. So imagine an entire building. The cost segregation analysis is going to break out that building and separate all the structural items from the non-structural and put them in separate buckets. And what those buckets are going to do, they are going to reclassify each of those components into their useful life. Like, for example, if you have an office building, probably the main entrance that has carpeting, it's going to have a lot more wear and tear than what you may have in an office space that's usually doesn't have that much traffic. So why would you wait 39 years to depreciate that carpet if you could do it in such a short period of time? And by law, accountants cannot do this because they are not engineers. So the IRS requires you to hire a third-party provider that's able to break out the mechanical, the electrical, the plumbing, to make sure that all of the items are categorized correctly and reclassified to their useful lives.
Wow.
Yeah.
And then you work with the accountant.
Correct.
To make sure that you do
all
of that.
And that's the part of, bringing everyone together to make sure that you're not leaving any money on the table, that you're staying compliant, that you have an audit-proof report. And last but not least, you want to make sure that every single dollar that you are investing, it's having a return on investment. And a lot of people think that, well, my CPA, wants to charge me $1,000 for the tax return, and that's a lot of money. I always say,
it's a lot of money, but she's doing a lot for you that you can do on your own.
Right. And if they're just doing tax preparation, maybe it's a lot of money.
I see.
I agree with that. But if you're working with an advisor that's teaching you the ins and outs of what you can do, they could charge you $5,000 or $7,000 for advisory services, but they're going to be able to put back $80,000, $100,000, $300,000 back in your pocket.
And this conversation is so important, Charina, because especially when you come from no money or you have a little money and you start growing, we're scared of that. Right? We're scared of, okay, I don't want to make money because I got to pay a lot of taxes.
Right.
And the more I make, the more taxes I paid. But there are strategies like what we're talking about, right, that can help you with that so you can put more money in your pocket. So my question to you is, what is the biggest mistake that, number one, agents do when doing their taxes, and then that investors do when doing their taxes?
The biggest mistake is going to be the lack of planning and not understanding their numbers. There's a huge misconception that, just because we have an accountant, they're going to magically make the taxes disappear. And that's not true at all.
That's what we pay them for?
No, that's not. That's not. And I want to normalize that because they do have a lot of work, and we have a huge talent gap coming up. And people don't understand that we have so many accountants that are nearing retirement age.
Wow, yeah.
We have approximately 120,000 accountants that are retiring in the next 10 years.
Yeah.
And then the graduation rate has dropped 20%. So that means that
Wow.
they're becoming extinct, per se.
We got to pay them more.
Right. Well, not only pay them more, but we want to make sure that we're using them to their highest and best potential and their abilities, right? And at the end of the day, we want to invest in our future. And I know like on the previous podcast, you were talking to Dr. Patty and talking about the different systems where you have separate accounts for each item. I always recommend have an additional account for taxes. If you know you're going to be writing the IRS a check for $80,000 every year, don't. And again, this is my personal
resistance.
This is what I do personally. Yeah. It's not an advice. It's just what I do and has worked for me.
Okay.
If I know I'm going to be paying that amount of money by the end of the year, I'm putting it separately in a separate account.
Yes.
And I'm not doing the estimated payments. Before the end of the year, I'm investing that money.
Wow.
In an alternative investment that has a tax mitigation tool attached to it. So now I'm investing in my future and not in the government, because who else is going to do best with your money than you, right?
Yeah.
So the idea here is that if you write a check to the IRS, it's gone forever. You don't see it again.
Right.
If you put in an alternative investment or you invest in real estate, now you have the potential to keep that money growing over time and set yourself up for success for your future.
That is great advice right there. So now let's pivot to the big topic, assisted living facilities, or ALFs. Honestly, before I met you and before this conversation, I didn't know what it was. I thought it was just another acronym, but you've convinced me that this is one of the biggest opportunities in real estate right now. So let's start simple. What is an assisted living facility, and how is it different from a regular multifamily or rental property?
Sure. The assisted living facility is going to be a residential rental home that is converted into an elderly care facility. So the business model there is that you have a real estate investment arm, but then you also have an operational business arm. And combining these two with the powers of tax incentives like cost segregation and energy incentives and additional tax credits and incentives that may be available, you can actually run a highly profitable business and close that gap. I don't know, many of you have heard of the silver tsunami, right? 10,000 baby boomers are retiring every single day.
My dad retired. I get it.
Yeah, they're turning 65, they're retiring, and now they need care. And this is a nationwide problem.
Wow. Mm-hmm.
So if you're in real estate, just like it happened in the past 7 years with Airbnb, this is going to be the next big thing for the next 2 decades. So if you can get in now, you're going to have an edge. And you can position yourself as a trusted advisor by being the connector that brings the operators, the investors, and then you're finding the properties for your clients so they can continue growing their real estate portfolio.
So someone who's listening to this, they're like, what is this? How do they get started? Say they found the property, they found the home. Now what?
Well, there are programs, training programs that you can start looking at and getting educated. There's experts in the space that will teach you the ins and outs on how to run that business or how to bring the right teams in place so you can offer this as a service for your clients. It's very important that you start by doing some research and looking at the demographics in your city and your state. What areas are, seeking the most assisted living facilities, right?
And you have one right now?
I don't personally own anything, but I will be getting into that. With our real estate fund, we have a mixture of different types of businesses. For many years, gas station, car washes have been very profitable because they yield the depreciation benefits very well. Commercial real estate, and then obviously all the residential rentals that we've seen over the past few years.
Are you working with the assisted facilities right now? How
I,
many are you
I
working
am
with? Okay.
working with a team. I'm actually going to be at their conference in November in Phoenix.
Okay.
So I am learning as I go as well.
Okay.
I'm a
Yeah, so you
life
can teach
learner
us. Yes.
and happy to answer questions or point people in the right direction.
Yes.
It doesn't cost you anything to ask questions and get involved now because you will have the upper hand at the end of the day.
Yeah, 70% of our members here in NAHREP, South Florida, we have about 1,000 members. 70% of us are realtors. So though the community that's listening to this, how can we plug into the opportunity? Like, where do we add value if we're not operators ourselves?
The biggest value is going to be identifying those properties and plugging yourselves into the operator type of the operator's world, right? I have a few clients because I've already done the studies for many of these properties in the Central Florida area in Orlando.
Okay.
And the cool thing about it is that those homes require fire protection. They require specialty lighting and equipment. So there's a lot to carve out as personal property to increase those as the accelerated depreciation. So it's just a matter of getting connected, start networking, and start building your database of contacts in the area.
Best place you can network is with NAHREP South Florida events. The
Yes.
next one is October 23rd. Like we mentioned, Charina is going to be there. They can plug in with you. They can plug in with your team. They can talk to different experts that we're going to be bringing to that event. And this is where tax strategy meets real estate, really. So can you explain why is cost segregation especially powerful for ALF investors?
Sure. Like I said,
or just a story of how the savings that you've seen with the clients that you're working with right now.
yeah. So with the acquisition of the property, you could obviously get a tax deduction on that project. But then the improvements, and this applies to other industries as well. And there's a lot of money that's left on the table because people don't do this process right. You want to create a baseline of the property, documenting the conditions that it was in at the time of purchase.
Okay.
Any improvements that you do afterwards also need to be documented. And working with your accounting team and CPAs, they're going to be able to identify which ones could be categorized as expenses and which ones need to be amortized over time, right? So you want to make sure that you are getting all of the details of all of your fixed assets and that you're able to take advantage of partial asset disposition, because people don't think about this. Every time you take an item out of your building, you're throwing money away.
Ooh.
If you're not recording these items properly.
Mm.
And a lot of times, like I said, the accountants have a lot on their plate. You know, they don't want to add extra work to their plate, and they don't want to be liable for documenting something that is not right.
And this is when you come in.
That's where we come in. We are a resource to the accountants, to the advisors, and the business owners. We come in, we understand what they're doing, and then we can bring those resources to the table and the documentation to make sure that they stay compliant.
We had talked about cost segregation that you can write off or get back up to $350,000, but you had mentioned prior that you helped an investor save $500,000 in year one, reinvesting in more properties. Can you tell me briefly a little bit about how you were able to get $500,000 in year one?
Yeah, sure. So it's all about the breaking out the different properties. So depending that specific contractor had benefits that were stacked with each other. So they had the 45L. It was a development of townhomes, and they were able to get the benefits of cost segregation. But then at the same time, they were able to get the tax credits for 45L because their units were energy efficient. So they were able to bank on the two. And that's the beauty of it, that we were able to stack these benefits together and make sure that you are taking everything that you are allowed to take and obviously be able to continue reinvesting in your growth.
Yeah. If someone's listening right now and thinking, this sounds exciting, but overwhelming. I mean, because it's a lot of information to know, right? What's the first step they should take to explore ALFs or a smarter tax strategy?
They should start by doing research in their area and looking at the demographics and understanding who are the operators in the area and how those facilities are performing.
Okay. So as a real estate agent, I hear you. And all I'm thinking is, well, I need to know this so that I can serve the buyers that are coming, right? Is there a cheat sheet that you have or that you can create or that you can give people that's, to real estate agents that say these type of things you want to look for in a home when people are buying so that you can say, hey, go for this home instead of this one so you can have more of a deduction?
Sure. Yeah, you can obviously reach out at any time. We have tons of resources, recorded videos, webinars that you can take advantage of. And those checklists are also available, as well as the calculations for those projections. So just, all you have to do is reach out and I'll be happy to help. And if I can, obviously, someone in my group will be able to get you where you need to go.
So tell them, how can they connect with you directly? How can they find you?
Yeah, you can find me at charinapadilla.com. All of my social media handles are there. I encourage you to follow me as I'm posting tax updates constantly. We do a lot of lobbying in DC, and we always want to bring the latest and greatest information about tax legislations. And then obviously within my website, you can also request your free benefit analysis or call or email me.
Yes. And on October 23rd, we are talking about commissions and capital, what you can do to scale and be smarter with your taxes. So Charina, just thank you so much for being here today for this conversation. Not only you made something like tax strategy relatable, but you also shown us why assisted living facilities are a space we should all have on our radar. That's now on my radar. And what I love most is how you bring both resilience and strategy into everything that you do, the way that you also work. I mean, working with you with other clients, I've seen how warm you are. And I know that you're going to be taking care of the clients, so I'm never scared to just kind of send them over to you. And for everyone listening, don't forget to like and subscribe to our channel so you never miss an episode of the NAHREP South Florida podcast. And if you're local to South Florida, we will see you on our next NAHREP South Florida event. And if you want to become a member, it's just $49 a year. That gets you access to 4 local events, plus regional and national events. Charina is one of our national partners as well. And there you can network. We talked about the importance of that. You can learn, you can grow, and more importantly, you'll be part of our big goal. Our goal is to grow 500 active members here in South Florida by the end of 2025 as we pursue our road to chapter of the year. You can be part of that today, and you can connect with wonderful people like Charina. My name is Cindy Perez, your 2025 NAHREP South Florida president, and I'll see you at the next event.